This is the reason why you are always on the wrong side of the market. How's it going, guys? In today's video we will be going over the AMD cycle, which stands for accumulation, manipulation, distribution. This is also known as the power of 3, which can be represented in the form of an open high low close or open low high close. So there are 3 things happening in this cycle. Number 1, orders are accumulated. This is when price moves sideways in a consolidation, and that's where orders are being built up. Number 2, these orders are then manipulated. This is when price will run either below or above the consolidation to trap breakout sellers and breakout buyers. And number 3, price will distribute in the opposing direction to its intended draw on liquidity. Now, if you're struggling to picture these 3 steps, we're going to hop into the next slide. This is where I will show you a diagram of the AMD cycle, and I'll also show you a matching chart example of a bullish and a bearish scenario. Okay, so here we are. Beginning from the left, we have that diagram, right? So we have an accumulation. This is where orders are built up in a consolidation. So as you can see, there's no clear trend. Price is moving sideways. Following this, we get a false run below these lows, right? This is known as the manipulation. And then finally, we get that move to the upside, also known as the distribution. So that's a textbook example of the AMD cycle in a bullish scenario. And if you look to the right, we actually have a chart example, right? So the same thing's going on. No clear trend in the market, sideways movement. Then we get a run below those lows and an instant rejection and expansion to the upside. Just to reiterate a point from the previous video on market maker models, this is a textbook diagram, right? Not every example in your charts will look perfect like this. Don't get me wrong, you will definitely have some very nice clean textbook examples, but don't expect to see a perfect clear accumulation, manipulation, distribution every single time. It will not always be clear, it will not always be textbook. Over time, your skills will increase and you'll be able to recognize these patterns in many different scenarios. But for now, to build your anticipation skills and recognition skills, I recommend you guys focusing on the cleanest and clearest examples. Like I said, over time, you will improve with this and you'll be able to spot different setups. Okay, so moving on, let's hop into the bearish example. So here we are. The only difference is now is the charts are flipped, right? The diagram is also flipped. So starting with the left again, we have that accumulation, price moves sideways, no clear direction. We then have a false run, also known as the manipulation. This is where breakout buyers pile their positions, right? They are buying at this area, thinking price is going to run higher, but then we distribute lower. And now just to follow up on that, on the right we have a chart example. So once again, we have that tight consolidation, a quick manipulation in the form of a run higher. We then get a nice rejection wick, followed by displacement, creating a fair value gap. Price returns into that fair value gap and then distributes lower. So there we have a very nice clean textbook example of a bearish accumulation, manipulation, distribution cycle. So it's all good knowing how to spot this pattern, right? But what we really want to know is how can we utilize this pattern to make ourselves profitable traders and how to catch good setups utilizing the power of 3. So from here on onwards, I will be teaching you guys candle anatomy, and I will be referring to the power of 3 as either the open high low close or the open low high close, depending on whether I'm referencing a bullish or a bearish candle. So what is candle anatomy? Candle anatomy is simply the formation of a higher time frame candle, right? So if we look here on the right, we have a bullish candle. Referencing the open price, we can see that we get that false run below the open price, also known as the Judas swing. From here, we get that distribution upwards. Now you can see in this specific diagram, I've also included the accumulation, but it's very important to note there will not always be a clear accumulation when referring to the open low high close pattern. A lot of the times you will just get a nice swing below the opening price known as the Judas swing, and then that bullish distribution, which is also fine. So just to reiterate, we have that opening price. Sometimes we also get an accumulation with this. We then have that manipulation. This is where the candle low is set in, and then we get a distribution to the upside. This is where the candle's high is put in, and occasionally we'll have a small little retracement which sets the close of the candle, creating that wick on the upside. Okay, so let's move on to a bearish example. Once again, here we have a bearish candle, similar situation, right? But this time we are looking at the open, high, low, close. So beginning with the left, we have that accumulation at the opening price. We then have that manipulation creating the high of the candle, and we then have a distribution creating the low of the candle. We then get a final retracement capping the range, which leads to the close of the candle. Now this is such a powerful concept, right? I really want you guys to put a lot of emphasis on this. I personally believe this is one of the core concepts that every ICT trader should be using. If you are able to sieve out the next daily expansion, whether it should be bullish or bearish, and you can then frame an AMD setup, you will be profitable, and there's no doubt in that. So following this, I'm going to show you guys a chart example of how I utilize the power of 3 using the sessions, right? So that's the Asia session, the London session, and the New York session. Just a quick disclaimer, if you haven't watched the daily bias video yet, I would recommend watching that, as it will supplement this video, right? It is very key to know where that next daily candle is going in order for this to work for you. Okay, so here we are on the daily chart. As you can see, we've run sell side liquidity here with a failure to displace beneath this low. The next day opens and we also still fail to go beneath this low, right? So from here, what that's telling me is there's still reason to go higher for this high. So the draw on liquidity is buy side liquidity now. So I'm projecting that next daily candle to form bullish. And if you did watch the last video on kill zones, you would also know that typically when we are bullish, we expect the low of the day to be set during London session. That's for a classic buy day profile. So with this in mind, we're expecting a bullish day. We know that London should typically set the low of the day. What we can picture, right, is we should get an accumulation, London being the manipulation, and the New York session being the distribution. So let's go into the lower time frames and see how we can get involved. So here we are on the 15-minute chart. This is just before Asia session. So I'm going to play this out to see how it forms. As you can see, we're not getting clear movement. This is sideways movement, also known as a consolidation or accumulation. So this is 12 AM. We can also mark out the midnight opening press. If I just extend that out. And we'll make that nice, big and yellow. Okay. So once we've done this, I'm just going to box off this session as the accumulation. So I'll do that in a light blue. There we are. Okay. So let's play it out. Here we are coming into London session. We're looking for that low of the day to be set beneath the accumulation, right? So we're looking for a manipulation now. And there we are. We've run beneath this session, right? We've run beneath the Asia session, which was also the accumulation of the day. So here we have the accumulation, London now making the manipulation. And I want you guys to remember, we are focusing on a bullish day. This doesn't mean that you short because London has gone bearish. We have to have the AMD pattern in mind. We are still hunting bullish setups. So just continuing on from here, let's play out a bit more and look for that distribution, right? As you can see, we get that nice clear displacement to the upside, creating a fair value gap. And this is just at the end of London session. So this is a no entry zone. We shouldn't be looking for trades here anyways. But what I will do is box this off as the manipulation. We'll do that in a red color. And I'll actually extend this accumulation over, since this was all consolidation, right? And that was the manipulation. There we are. Accumulation, manipulation, and we now have that distribution. But to look for a valid trade setup, we must be inside a kill zone. So I'll wait for a New York session. Just moving up, getting a bit of a retracement. Here we are now, New York open kill zone. So here we are. We have this nice fair value gap at the open. We do that in a grey color. This is a nice opportunity to take a long off of. Okay, we get some nice upside movement. It looks like we just barely tapped this fair value gap, right? Depending on your broker, you might not have got filled in here, which is no issue because we also had another displacement here. giving us another entry opportunity. And if you didn't get in there, we also have another fair value gap here. As you can see, holds price very nicely, and we rally to the upside, expanding towards our draw on liquidity, which was this high over here. So that pretty much sums up how I frame the daily candle using the AMD cycle, or the open, low, high, close, right? This is the opening price, this midnight price. This is that low, the manipulation, and then we have that distribution coming in towards the end of London all throughout New York session. And we'll put that in green. There we are. Accumulation, manipulation, distribution. As always, this was just a textbook example. Price is not always this clean, nor is it this clear. So please do some testing for yourself and see what works for you. So unfortunately guys, that does bring us to the end of this video. If you did enjoy it or you did find it helpful, please like the video and subscribe. If there are any questions you guys still have, feel free to comment down below, or alternatively, DM me on Twitter and I will make sure to reply to your guys' DMs. Take care and thank you for watching.